You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. It is a dangerous world out there. Volatility is on the rise, and your clients' portfolios are under assault from a growing number of threats. Simple diversification is no longer enough to shield the assets under your protection. Registered investment advisors, financial planners, and asset managers need a new weapon in their war on risk. Welcome to the Advisor's Option, the program designed to arm busy advisors with the information necessary to properly manage risk in this volatile environment. From options education, trading strategies and tips, to industry news and interviews, you'll find it all on the Advisor's Option. The Advisor's Option is brought to you by the Options Industry Council. The OIC was created to educate investors and their financial advisors about the benefits and risks of exchange-traded equity options. For more information on how the OIC can help you implement options in your practice, please visit optionseducation.org. The Advisor's Option is also brought to you by Option Research and Technology Services. ORATS is your source for options backtesting. It's where you turn your ideas into results. Founded on the floor of the SIBO over 2 decades ago, ORATS is a full-service option research firm focused on helping you develop options strategies in line with your investment objectives. With a state-of-the-art backtesting platform, scanning, and implementation tools, ORATS offers end-to-end option strategy development, making the whole options trading process easier. For information about backtesting, scanning options data, including dividends and earnings, visit orats.com or email Matt Amberson at matt@orats.com. And now, it's time to learn how to implement options in your practice. It's time for the Advisor's Option.
All right, everybody. That music means it is time once again for the Advisor's Option, the program here on the Options Insider Radio Network. For you out there, the busy financial advisor or asset manager, maybe you're thinking about dipping your toes into those options waters. Maybe you've already taken the leap and it's been a little bit more than you anticipated. Maybe your clients are coming to you saying, tell me more about these options things. Either way, we got you covered here on the Advisor's Option. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the aforementioned network. We're hot off the heels right now from the epic 3+ hour extravaganza known as the Option Block 1000 yesterday. I'm amazed I still have a voice. It was a fun time. Glad so many of you were able to join us. Also glad so many of you are enjoying the latest edition, the newest update, unveiled yesterday for the first time, Options Insider Plus and Options Insider Pro. If you're intrigued, want to learn more, check them out over there at theoptionsinsider.com. Go to the /shop link. It'll explain all of that for you. Basically, if you like a lot more in live, you want to get the shows immediately in your ears, and the plus is for you. Whereas if you want more, including exclusive shows, including the much requested return of Options Oddities, cool, exclusive Q&As with options experts, and a whole bunch more. Options Insider Pro is for you. I know a lot of you have already been diving into that and checking it out. So keep hitting us up, letting us know what you think. We're really excited. It's going to be something fun out there. We're also excited for this show. So let's get into it. First, I am joined, as always, by my cohort, my compatriot, my partner in all things advisors, option crime, Mr. Matt Amberson, the founder over there at RHOADS, a.k.a. Options Research and Technology Services. Mr. Matt, welcome back to the Advisors Options, sir.
Great to be here, Mark. I'll throw the saddle on. I could hear a little bit of tiredness in your voice, so that must have been some show that you were on.
We had quite the extravaganza yesterday, but there is no rest for the wicked. I am thrust right back into the fray. In fact, I had a great chat with the folks at UBS not too long ago about the exact topic of this show, advisors and how they can or should use options. So after you're done listening to this episode, listeners, if you haven't already, check out that interview we just did with them. Pretty fascinating stuff. And also joining us to carve up the world of advisors and options, our old friend, the once and future Dr. Bix, a.k.a. Mr. Russell Rhoads, a.k.a. a professor over there at Loyola, also does a side gig over there at EQ Derivatives, and also, lest we forget, also the guy who kind of wrote the book on this stuff, a.k.a. Option Strategies for Advisors and Institutions. Mr. Rhoads, welcome back to the Advisors Option for the first time since 2017. It's been a while.
Yeah, it's been a long time. And I saw the date on the last time I was on this program. It was February of 2017. Pandemics were the things of movies.
Yes.
At that time. I just think about how different the whole world was. Amazing how things have changed.
Many things have changed, including this program. Got some new segments since you last joined us, including the P&L statement. So let's get to it.
What the heck happened in the options markets since our last episode? Let's find out with the P&L statement.
All right, everybody. Welcome to the P&L statement. You know, this segment was born, as Russell alluded to, out of the madness, the maelstrom that was the pandemic. We found ourselves month after month talking a lot about what's been going on in the market from an options and a volatility perspective. So we thought it made sense to encapsulate that into its own segment. Thus, the P&L segment was born. The P&L statement was born. A lot to look back on. You know, Matt, we'll start with you. It's been another tumultuous month here from an overall volatility perspective. You know, for the longest time, we were saying here on this show, man, how low can VIX go? Can it break into a 20? And now we've seen that it has, and it can do it repeatedly because we've seen multiple attempts to drift into the higher and maybe even middle teens. And then all of a sudden, some shock to the system happens, and we're right back up in the low to mid 20s again. And we're rocking and rolling yet again. So we're in this interesting period. You can call it maybe a series of systemic shocks. Maybe you want to call it bouncy, to use a technical term, whatever you want to call it. We're in this strange time frame now, Matt, where we see the erosion playing out and the anticipated decrease of vol, and then bam, here we go again. We're off to the races. Is it Yellen? Is it some global macro catastrophe? Whatever it is, something spooking the markets, and then we drift back down again, and then bam. And it's kind of like clockwork. Once a week, once every couple of weeks, we're getting these systemic shocks. So what's been lighting up your tape from a vol and an options market perspective over the past year? And what are your models telling you about this regime going forward? You like my technical term for it, sir? Bouncy?
I like bouncy. Mark, I've noticed that my trading is doing better. And so what I'm going to attribute that to is the market is getting more rational. For some reason, I think the Fed is losing control a little bit. I think our signals are better. Inflation is coming. I'm a gold bug. I got my silver, and they're starting to do all right. I think that the whole let's call it the deep state pushed down crypto so far this last weekend that is able to get some more of that. So I'm positioning myself for some inflation. That means owning, to me, real estate, gold, silver, a little bit of crypto, and being very careful with the market, having those puts in case they do jack rates and send the market down. But it looks to me like, what I've been coming on for the last month is talking about the Robinhood effect of the skew. Now that's coming down a little bit. Finally, that has come out of the market to a large extent. It's still a little bit high, but not crazy like it was. So that's coming out. Volatility not too high, coming down. I mean, high in historical terms, but it has been higher, and it's kind of sliding down. So that's been good for the market. So the market just seems to be floating up in a what did I see on the Norseman? A triangle that is going up in. So that's what I'm seeing out there. It's the signs of inflation are coming out, but the market's still drifting up. And I think the Fed is losing a little bit of control, and that's going to create keep volatility pretty high. And I think people better have some protection out there in case they have to jack rates. Inflation's a lot about expectations, so they're going to have to get in front of it. That's what I'm seeing, Mark.
Yeah, we didn't even get to like the crypto, like you just brought up. You're right; it has been so beaten up of late that it sounds like, Matt, I know for a long time you were kind of not washing your hands of it, but a little bit reluctant to dive back into those waters. It sounds like crypto's been beaten up enough that even you, Matt, have decided to dive back in a little bit.
So I keep my bids and offers in. I was 20,000 bid at 99,000 offered. So I was not caring. And then when they started hammering it, I mean,
did someone fill you at 20,000? If so, I have to tip my cap to you, sir.
No, I got filled at 31 though, and that didn't even print on some lows. But when the Pope starts getting down on Bitcoin, they're pulling out all the stops. So that's when I got in.
The Pope and crypto, two things you don't usually hear in the same sentence together. Mr. Rhoads, same question for you. I know you spend a lot of time looking at the overall volatility regime and what's going on out there in the markets from a vol perspective. Let's start there. What are your thoughts on this new quote unquote bouncy / range bound regime we seem to be in, at least for the foreseeable future here in the vol space? And then B, getting to Matt's other point there about the just massive beatdown out there in crypto of late. Has that drawn your attention as well?
I'll start with the crypto real quick and then get into the other stuff. The crypto, I had bailed it out of everything when it was around 35,000. So I just feel much better about myself as a human being since it came back down to those.
Turns out you were right, sir.
I can start over.
You just had to wait a little bit.
So I paid up, bought somebody a car, and did a couple of other things. I was like, it'll come back at some point, and it did for a second. On the volatility front, I've actually been doing more work on sector volatility, and Matt mentioned I identified 4 sectors that the implied volatility is still kind of expensive. Real estate was one, industrials, energy, and materials are the other 3. And I think it might be a little bit of what Matt just said, that there might be some bracing for inflation out there. Where things are cheap, the cheapest volatility I came across was consumer staples, which is an area that I think would not get hit as much with inflation, because those are the kind of things you would be able to pass along to the consumer higher prices on. You got to buy your milk, even if it's $9.50 a gallon.
You do have to buy your milk, unless you're me and you're lactose intolerant, in which case you're good. You don't have to buy any milk out there. But we do have to keep breaking down the world of volatility, this time through the lens of earnings. It is time for the earnings volatility report.
Earnings announcements can move markets, but what is the options market telling us about upcoming earnings events? Let's find out with the Earnings Volatility Report.
All right, everybody, welcome to the Earnings Vol Report. When Matt and his team aren't busy talking to us, they're over there cranking away all the numbers that you folks love. For this time of year in particular, of course, it's earnings season. We're still in the middle of it. It's still hot and heavy. I know sometimes it's easy to lose sight of that when so many macro things are buffeting the market about hither and yon out there. But there are some things you could focus in laser-like and really just see what's going on from an earnings and indeed a volatility perspective. Still is a pretty hot season to come. This week we have, of course, today actually, We have Intuit, or I should say yesterday we had Intuit. No, it looks like today. Today, Intuit and Nordstrom. Tomorrow, Dick's Sporting Goods. Seems like there's a Dick's on every street corner these days. So is that working out for them? I guess we'll find out. NVIDIA, another big one, talking about crypto. NVIDIA was for quite some time there seen as the canary in the coal mine for what was going on in crypto. Maybe a little bit disassociated from that now, but we'll have a chance to see. Snowflake was a hot IPO for like 5 minutes. I guess we'll find out what's going on out there. Thursday, Best Buy, Dollar General, Dollar Tree, Medtronic, a whole bunch of things. Costco, Hewlett-Packard, Dell. Friday, Big Lots, and a lot of other names popping off these days. Matt, I know you guys are over there crunching the numbers over there. I feel like a broken record. We've been saying this since the pandemic began, but, is this the time? Is this the moment when earnings are going to matter again? So far, every cycle, the market has slapped both you and I in the face and given us a resounding no. But perhaps, I hold out hope. Maybe I'm just like a battered, abused spouse. I keep coming back for more. Matt, is this the season where things will turn around?
Mark, this is always a painful conversation for us. And we always think, been in the markets for so long, it always turns around, but it just is not doing it. I did see an interesting graphic on Twitter. The percent of S&P 500 companies beating profit estimates, it looks like an arrow going from the bottom left to the top right, and now it's nearing 90%. It's 87%. And when they beat, it's not that great for the owners of, what we call the light side, the owners of these straddles. So, no, it's been another painful month for owners of volatility around earnings. We measure these straddles going into earnings. That's our earn move implied, and then we look at the actual. It's usually right around 100%. Now it's getting down towards 75%. And the win rates that we look at, those are normally about 40%. And on the wins, and now it's down around 30, 28, 30, something like that. So not a very good earnings season. And there has been some notable exceptions out there, and as you say, there's some interesting ones coming up out there. You mentioned Snowflake. Those types of companies are implying these large moves, much larger than has happened in the past. There's not much history there, so it's tough to get a signal on how far it's going to go. So those are coming up. Those have a lot of retail, Nordstrom's, Urban Outfitters, as you mentioned. But it doesn't seem like it's going to turn the tides on the overall what we're seeing out there is just again, companies not moving nearly as much as we've seen in the past, and we've chalked that up to now the good earnings, and we've chalked that up to also a lot of the retail investors aren't looking as closely at the earnings. They're looking more at more of a macro level, or just buying those out of the money calls. I'd like to then kind of wrap that up a little bit on the earnings front, and really when Russell was talking about inflation and about his sectors, that really, like I said, wow, I went back to our wheel product, and we have this sector analysis, and every one that Russell mentioned is on the top of our highly valued, or if not overvalued, option implied volatility. And the way that we look at it is we look at their components. So we go out and gather all the weightings and the components of all these, consumer staples, materials, et cetera, and we weight their implied volatilities, and we compare those to what's going on in the underlying ETF, and all the ones that Russell mentioned, staples, materials, even some banks, home builders, and real estate are on that list. So Very interesting how we're thinking alike. And I didn't think about inflation, but that could have something to do with it. So that's just another thing that might be taking away from the concentration of investors on the actual earnings that companies are having with these more macro events, Mark.
That certainly could be the case. As you mentioned here, this season is looking a little bit better than it has in past earnings season. We're averaging out about 75%. So as you mentioned, Matt, if you bought a basket of earnings vol, you're making about 75 cents back on the dollar. So you're not quite losing as much as you used to, but still losing money out there net. So we'll see when that worm will start to turn out there. You're also right. Some individual names that perhaps have a little bit shorter histories out there, like Snowflake, are pricing in some juice. Snowflake was at about 234 coming into this analysis you guys did. And you guys, of course, can see all these reports for yourselves. You know where to go, listeners, theoptionsinsider.com. Click on the Options, News, and Articles tab, and you can head off to the races on all of the earnings, volatility madness you can sink your teeth into. But Snowflake pricing in nearly $20 in their straddle right now, whereas in the past, and of course, very short window of past to analyze, but in the past, they moved about $12.50. So a lot of extra juice, it looks like, on the docket for Snowflake. Is it warranted? I suppose we'll find out. You guys can check it all out for yourselves. Earnings move results, and earnings season reports over there at theoptionsinsider.com. But Mr. Rhodes, I know you like to watch all things macro vol, and I think what Matt brought up is kind of interesting, the notion of sector vol and how that's performing out there as well. Maybe that is stealing some of the thunder from some of these earnings related volatility developments. What are your thoughts on the ever evolving and these days ever interesting world of sector volatility, sir?
Well, what I was looking at, I came at it from a different angle. I was just using the iShares ETFs and where the implied volatility is compared to where it's been throughout 2021. It's lower in each of the sectors relative to where VIX is relative to its 2021 average. So it just feels like maybe people are putting a little bit more pressure on the sectors that they're not as concerned with. And, if we do get a bout of inflation, it definitely would hit S&P 500 index options. In fact, I think it might hit those options because everybody would consider it a macro event more than the Russell 2000 or the NASDAQ 100 options. And just, again, I did a very basic measure. I think what Matt does is a lot more in depth than what I do. Those two markets looked a little bit cheaper relative to VIX as well. And then just on the earnings front, I don't know it that well other than what they do fundamentally. And it just seems to me that NVIDIA is the biggest crapshoot ever. It's got to have so many unknowns going into earnings because they do make the chips that the kid next door uses to mine Bitcoin. And but on the other side of that, there's all kinds of global supply chain issues going on. So is that going to be a positive or a negative for them? I think, and it looked like the straddle was pricing about 5% or so. I just wonder if there's an opportunity for a volatility event around that one. And one other thing is they did just announce a stock split just before earnings. Am I getting that right? Sometimes when earnings are going to be bad, you say something positive just before it.
Yes, they did announce that. You're right. If past is prologue, the stock should be up about 8,000%. Isn't that what we saw with Tesla and Apple when they announced their splits out there? It's just the key to printing money. So apparently, I'm surprised more companies haven't jumped on that bandwagon since then because those two have passed as prologue. Stock splits, just the key to all sorts of things being unlocked and exciting things to happen in the future. Speaking of exciting things, we have a lot to break down. It is time to get the buzz.
Busy financial advisors don't have time to follow the latest developments from the options market, so we do it for you. It's time to get the buzz.
All right, everybody. It is time to get the buzz here. You guys are busy dealing with your clients. I get it. So we're here to talk about some of the stories and developments you may have missed since our last episode. One of the big stories we've been tracking and watching, I think the entire business has, since the start of 2021 was, can this party continue? It's hard to call the year that was 2020 a party, but from an options perspective and solely from that perspective, it certainly was a very, very active year. And people wondered whether 2021 would slow down and whether that volume could really be maintained. And at least in the first quarter of this year, the answer was a resounding yes. We saw pretty much month after month new records being set. January was the busiest month in the history, and then February came along. February, I think, was right behind it. Then March was the busiest. So I think if you add them up, it's March, then January, then February. 1, 2, 3 in terms of the busiest months in the history of the business. So obviously Q1, the busiest quarter in the history of the business. Now, of course, we have the numbers from our friends over there at OCC for April. We'll have the numbers for May soon. We'll see how this trend is continuing. April, a very active month, not up there with the crazy mad months of January or of March, but still a very active, the most active April on record if you were tracking such things, with 715 million contracts. It's up nearly 30% from April of last year. Remember, April of 2020 was by no means a quiet month. That was, of course, the month right after the big sell-off. So we started to see the aggressive beginning of that V-shaped recovery. And also, that was kind of the moment of the awakening of a lot of these retail masses to options. So April of last year was no slouch, and yet April of this year, almost 30% higher than that. Now, what's interesting, too, if you start parsing the numbers, remember, OCC clears a lot of things. There's some interesting nuggets in there as well. We'll start on the options front. Total exchange listed options volume, 711 million contracts, up about 29.6%. Equity options, drilling down a little bit farther, 674 million. It's up almost 31%. Cleared ETF options, drilling a little bit farther down, 189.4 million. That's up about almost 21%. A couple of interesting bright spots, though. Index options, for example. In this past year of madness, where we saw almost everything was hitting new records, index options was one of the few lagging spots there where it was usually down month after month. This past month, up 37.2 million, up about 12.5% compared to April of last year. And another interesting bright spot, futures. Remember, OCC pretty much only clears VIX futures. There's not much left on the futures front for them to clear. CBOE delisted their Bitcoin future. They probably may be rethinking that now. But so it's all that's left is VIX futures. And that's another one that's been down month after month, year after year, pretty much ever since February of 2018 until this past month. Futures cleared at OCC, 4.2 million contracts, up almost 60% from this time last April. Remember, we had just seen VIX spike to obscene levels in March. So starting to come off of it. So VIX futures were trading last year, but nothing compared to this April. I know, Mr. Rhoads, you used to hang your hat at a place over there called the SIBO. So you're a little bit familiar with both index options and the VIX futures themselves. Do any of these numbers, maybe the overall numbers for April, or indeed some of these interesting bright spots, the index options and the futures over there, do any of those surprise you? And what are your thoughts on this, this ongoing question everyone's wrestling with of, can the party continue, sir, in 2021?
Well, typically when we get a volatility event like we did, let's just say last March, you asked me what surprises me, and that is where I'm going with this. So typically when we get the volatility event, we do see a drop off in volume, and I was a lot more fixated on VIX volume when I worked at SIBO than I am now, but I still do pay attention to it. And it usually would take 5 to 6 months for us to get back to, where volumes were. And it just took a lot longer this time, and it took a lot longer while other volumes were catching up. So I don't know if there's been a shift to. I know there's been a shift to a lot more individual stock option trading, but I don't know if that relates to how long it took for VIX to improve and get back to levels that make people at my the place that I used to hang my hat happier.
And why do you think that is? That's a moment I've been waiting for a while now, to see some sort of uptick in VIX futures. I kept thinking, kind of like I have with the earnings vol. Okay, this is the month, this is the season, this is the cycle where we see that uptick, because VIX was moving, VIX was spiking and coming off. There were certainly reasons to be trading the VIX futures. And yet, for whatever reason, we didn't see that until April for some strange reason. It's not like April was that aberrant of a month compared to what we've seen over the course of the past year and change. Yet for some reason, April was the month, Russell, where the VIX futures came back to life. I thought we were all kind of waiting for, another inverse ETP like XIV to come in and start kicking up that volume. So what do you think it was about April that helped turn the futures back up to 11?
Well, I think what ended up happening in April, and it's gone away since, the volatility work that I was doing on sectors, I actually did it on broad-based volatility indexes around the world. And VIX, the Russell 2000, NASDAQ, they're all much lower than the average for 2021. Guess what is slightly higher than the average for 2021 right now? VVIX is slightly higher. And that wasn't true for a while. In the time period where VVIX had gone back to where we would consider more normal levels, which you've got to have sellers of those options and people that are willing to get short volatility one way or another, pushing VVIX down, they got back out of the way after April, I think. And but you continue to see in VVIX that there is some skittishness behind the short volatility traders. You need a short volatility. You need a short volatility trader in there for people that want to buy volatility to try and benefit from it. And I think volatility has not been pushed down in the VIX complex to levels where people who think about buying it were comfortable buying it, didn't think it was too expensive, but it finally did reach those levels in April for a while. And we're back down to those levels today, but VVIX is not replicating that move to the teens in VIX.
No, you're right. It is it was around 120 levels not too long ago. Not surprising, maybe given the massive movements in volatility we've seen out there of late. But I know, Matt, when you're not busy watching the overall volume numbers, as you mentioned earlier in the show, you've been keeping your eye on this, the so-called Robinhood effect, the impact of small traders, small customers, typically on some of these small delta calls, as you like to talk about them, on both wings, on the call and the put wing. I know in the past you've talked about it in some of these high-flying tech names that folks are pretty excited to bid up the wings. We've talked about it before on shows like TWIFO about things like the Russell 2000 and how the small delta calls were just blowing the doors off out there as well. So I know this is an area that's fascinated you for some time, looking at the wings and how they're shaping up. And it sounds like you've come across some interesting new data, some new analysis on the wings, sir, that you want to share with our audience.
Yeah, we do so much analysis, but sometimes one slips through and I find out about it. So I frequent Elite Trader, and one of the patrons over there did a back test on way out of the money calls, mostly, and some puts as well. And Ben Eifert had an interesting podcast, our friend Ben, talking about how his company is kind of the lender of last resort in a way. Where the market makers can't sell anymore, he'll go in at that time and maybe sell some. And I was thinking, I have a little bit of capital in my account. You know how I hate being short units, but hey, some of these are crazy.
And I was going to say, you're going to go out there selling units? That doesn't sound like you,
I
sir.
know, it's crazy. But, again, Russell is prescient. NVIDIA is one of the ones. And again, I think if Russell, I'm curious to know how the SMH fits into his analysis, but maybe he could check that out. But what my analysis is showing is, whereas the consumers and discretionaries were way at the overvalued side, the ETFs in the semiconductors were on the undervalued side vis-a-vis their components. So that means that companies like NVIDIA are overvalued, just like Russell was talking about on earnings. So I went out and hopefully didn't do something too crazy, but there are 3 days left. NVIDIA is at 625. I sold the 770s for like 60 cents. So I sold, I just wanted to see. That's way out. I mean, what is that, 30-something%? So, those are the types of calls that are coming up on these scans. Now, the person that back tested on Elite Trader did it differently, but they had some type of valuation. At ORATS, we have these forecasts of volatilities that really looks at kind of the fair volatility that for the entire surface. And so when I have something that's almost 90% overvalued, which is what this NVIDIA call was, those are the ones that that I've been looking at. So I'm just dipping my toe in, Mark. You know how these things go. You get about 15 winners and you get one loser that just wipes out all your profits. But, we'll see how it goes. That's what I'm looking at these days.
Who are you and what have you done with Matt Amberson? This guy out here blasting away on the wings.
Yeah, I know. Totally against my philosophy, but hey.
I like it. Playing a little fast and loose. So it sounds like even though you said the Robinhood effect as a whole in the market may be diminishing a bit, if you look out there, if you start peering through the trees and looking in the forest a little bit, you can find it in certain places, Matt.
Absolutely, and it is kind of crazy. I mean, these hundreds of dollars out of the money. Even FedEx has one. So we'll see what happens, Mark. I'm all happy now, but we'll see what the next option insider holds and see how I'm doing.
If I could have one piece of advice that you've said almost every show you've been on, it's always don't be net short units. I love it. Yeah. That's what's happened in the pandemic. Even Matt. He can't resist. He's selling the wings. Mr. Rhodes, I'm curious for you. Have you been lured to the dark side? Are you blasting away on the wings and some of your favorite names like NVIDIA? And what do you think about some of Matt's findings here about some of these wings still getting just crazy overpriced, sir?
I'm not surprised that the wings are getting crazy overpriced. I think I assume that retail is helping that out a bit, looking for the lottery ticket mentality that goes along with in the option market with retail. And God knows we love those folks so that we can turn around and sell expensive options to them.
Indeed. I guess we're going to turn this into the wing selling short units podcast. That's the new name of this show going forward. Short units. And it'll be on for a couple episodes until we blow out. But, Mr. Rhodes, when you're not looking at the wings out there, you actually did invoke a cliche phrase in some of your recent research, a phrase that I have traditionally banned on this network, particularly this time of year. I'm going to say it now only because it's pretty much the title of your research, so it'd be confusing if I didn't say it. But the article you just put up over there at EQ Derivatives entitled, "Is Sell in May," easy for me to say, I can't even say it anymore, I hate it so much, "Is sell in May and go away, is that dead?" Of course, this refers to the much ballyhooed, quote unquote, market adage / pearl of wisdom that nothing really happens in the summertime months. So if you got the heck out of Dodge, sold your positions in most stocks in May and came back maybe in September, you weren't really missing much. You can go focus on the rest of your life and maybe you save yourself some money in the process. It sounds like, Mr. Rhodes, mythbuster that you are, your research is saying nay to that, sir.
Oh, most definitely nay to that. And I think I only went back the last 7 years on what I wrote about. And the reason I went back 7 years was I was also talking about NASDAQ volatility, Russell 2000 volatility, and S&P 500 volatility. And I wanted to use VolQ, and that's how far back VolQ goes. But I think 6 of the last 7 years, you would have made money if you bought stocks the day before Memorial Day and sold them the day before Labor Day. So you're missing out on that. The one thing that was kind of interesting, and I am going to go farther back I'm going to use a new phrase that everybody uses. I'm going to circle back and go farther back in my research, and I'll get back to you guys sometime in 2022. But the NASDAQ had outperformed the S&P 500 all 7 of those years during the summertime. And it is a small sample in all. The one thing that I did find that was different during the summer versus the winter time, that's just how I had it in my mind, but the realized volatility and the volatility expectations on average are about 2 points lower between Memorial Day and Labor Day versus Labor Day to Memorial Day. And I do think that is a vacation-oriented thing that probably is accompanied by lower volume, which we may already be experiencing this week as we go into, we got to come up with a new phrase that invokes volatility as opposed to just selling and then going away.
Yes, just selling all your, that just always seemed kind of low rent to me.
The vacation vol.
There you go. Vacation vol.
The vol vacation.
Vol vacation. A little bit better. We'll work with it. We'll workshop it a little bit. But it does seem here, Mr. Rhodes, and we'll get to some more, I think, a little bit later in our listener mail, another one of your epic tables of drawdowns. It seems like chronicling the drawdowns of markets is definitely, and the periods they're in, definitely does seem to be a new angle to your research, sir.
Yeah, no, I'm always trying to look when big things are happening and everybody's scratching their heads a little bit, like, Bitcoin sells off an awful lot, and there are people that are new to that market or never paid attention to that market. I think it's useful to point out that what just happened to Bitcoin has happened multiple times in the past, and not just in time periods when Bitcoin was, like $20. When one of my coworkers bought 20 of them, that it has happened at higher price levels. And a couple of in all the crypto bulls, they all feel like in a couple of weeks we'll be back up into the 60,000 range. Well, two of the last three 30% corrections, and I think we're going to define a 30% drop as a correction in the crypto space, like we attribute 20% in the stock market space. Two of the three 30% drops, they basically followed through to almost 80% drops and took about 3 years to rebound. The other one took 3 weeks. So I'm going to predict that the rebound in Bitcoin is going to fall somewhere between 3 years and 3 weeks.
I like it. Well, you're touching on exactly what we got in our listener mail. I would ask Matt about this, but he's too busy slinging the wings out there. So instead, we get so many people asking us questions, and they're so patient. They wait a month for their answers. So let's get to some of those folks now with a little bit of the old office hours.
It's time to answer your pressing questions about options. It's time to start our office hours. You can become a part of this segment by leaving a question on theoptionsinsider.com, emailing us at questions@theoptionsinsider.com, or via social media at twitter.com/options, facebook.com/theoptionsinsider, or stocktwits.com/optionsinsider.
All right, everybody, let's get to it. Mr. Rhodes is just talking about cryptos and drawdowns. It actually dovetails well with an audience poll we just had out there. The results are now in. We asked you folks very timely. We said there's a lot of red on the crypto screen these days. You think this is a momentary blip or a sign of things to come? Quite simply, if you folks could buy a 10% out of the money call. And of course, we posted this at the beginning of last week. So 10% out of the money means a little bit different now than it did, let's say, a week and change ago. Much higher level we're talking about there. But if you could buy a 10% out of the money call expiring at the end of the year in one of these crypto underlines, which one would it be? Gave you 4 choices, well, 3 and the infamous other. Gave you Bitcoin, ETH, Doge, and other. On the other front, a lot of you hit us up for XRP. That seemed to be a very popular one. That one did pretty well. That got kind of beaten up of late. Now it seems like it's recovering a little. That one's kind of hard for U.S. clients and customers to buy due to all the SEC swords of Damocles hanging over its head there. So good luck getting XRP. But if you're a fan, it seemed like a lot of you were chiming in on it. You probably got in on it before the great banhammer came down. But ETH did win our poll, 54.8%, followed by Bitcoin, number 2, 21.4%. Maybe that shows you kind of where we are. Everyone's always looking at that dominance rate, Bitcoin versus the rest of the crypto space. And ETH starting to maybe change that conversation a bit, even though this past week's sell-off, maybe refocusing on that conversation a little bit. Number 2 is Bitcoin, 21.4%. Number 3, Doge, 14.3%, and other, like we said, XRP, a big one. Some Shiba Inu coin, I believe, was thrown in there, as well as a bunch of other fun, shall we say, altcoin out there. Other getting 9.5%. And getting back to some of the research Russell was just referring to, he's Mr. Drawdown Table these days, because he did compile it all for you. We have it in our show notes. We'll retweet it out. I think Russell has tweeted it out as well. If you haven't seen this chart, listeners, it's worth looking at, even if you're just tangentially interested in crypto. Kind of give you a little bit of frame of reference. Everything in crypto is so near term. It's so near dated. Is what did Musk say today? What happened here? What's going? I mean, it's all in the last day, last week, last 24 hours. It's beneficial to have a little bit more of a historical perspective when you're looking at this asset class. And if you do that, particularly through the lens of Bitcoin, as Russell broke down here, some interesting data. Takes a while sometimes for Bitcoin to bounce back. Russell hit on a few of them. I'll just hit on a few more here. We had a big drawdown back in July of 2010. It lasted until October of 2010. Took 78 days to recover. That was a 38% drawdown. We saw a similar, actually the exact same percent drawdown, 38% in 2011 as well. March of 2011 took 28 days to recover there. Some of the longer ones, June of 2011, it sold off 93% and took 618 days to recover. So everyone talks about crypto winter, and we'll get to that, but this one back here from 2011 to 2013, almost 2 years, kind of gets lost in the shuffle sometimes. April of 2013 sold off 70%, took 207 days to recover. And then from 2013 to 2017, again, everyone got so hyped up about Bitcoin back in 2017, they forget what happened before. December of 2013 sold off about 84%, took 1,175 days to recover. Didn't recover until February of 2017. And then, of course, the more recent example, the crypto winter from December of 2017, which is, of course, right around the date that both CBOE and CME launched their Bitcoin futures. Surprising how that worked. And then all the way through till pretty much after the election of this year, November 30th of 2020, 1,072 days. That's how long it took Bitcoin to recover from its 83% drawdown. So just a little bit of historical perspective. Mr. Rhodes, since you've been putting these numbers out there, have you gotten any pushback from the crypto kitties out there? What's the response been to this research, sir?
I didn't get beat up too much on it, and I expected to, and I think it's just because I think if the last three were like these 3 years to recover things, and it looked like I was being super negative, I'd probably, be hiding my children and changing my last name and all that kind of stuff. But I did have one person beat up on me a little bit and go, it's completely different now than it was back then. Institutions are more involved. They're going to buy on weakness, blah, blah, blah. So, I didn't take it as hard as I thought I would. I don't think it's going to drop 80% this time around. I think we did I think Matt mentioned we probably bottomed around 50%. I haven't paid that much attention to the numbers since I put the table up. But I don't think it's going to take as long to recover, but I would not be the least bit surprised if we just put in a range of something like 35 to 40,000 for some time until we maybe get some more potential regulatory clarity, I never in a million years thought that, the amount of energy that it takes to run the Bitcoin network was going to suddenly become a big issue, but apparently it is a big issue. And I'm certain that it will be addressed in one way or another, probably not factually, but I'll bet you a lot of Bitcoin miners will be able to come out and say, "Oh yeah, we're really close to carbon neutral on what we're doing now," and you can say that because there's no real way to prove it.
Yeah, you'd think a guy like Musk, who's Mr. Clean Energy, would have at least looked into that part before he started really aggressively talking up Bitcoin and buying a bunch of it, only to talk it back down a month or two later when he discovers the energy impact. That's strange how that works. But Mr. Matt, we kind of touched on crypto earlier. What are your thoughts on Russell's historical data here, sir? Does that bring any new clarity to your views on crypto?
I've been in all of those. So I
was going to say, you lived this data. This is your life here.
No, like I told you, I used to give these talks about peaceful parenting and there were a lot of Bitcoin people there, and they would beg me to buy it at $10 and $20, and I said finally at $100 I bought a little bit, and so I've lived through a lot of these, and so my apathy or ambivalence towards it, and Mark, I did bring up the energy part of it on your show here. I'm not sure if it was the advisor option or the crypto rundown, but yeah, that's a big thing. I mean, I looked at being a miner, and all you're really doing is paying for the energy and breaking even and getting Bitcoin. So I'm like, why don't we just go buy Bitcoin? So, and then back to the question, I thought the question was interesting too. Ethereum wins that, but I don't know if it's more, if they like Ethereum more, or, the volatility in Ethereum. Of course, you'd rather have a call, the volatility is much higher in Ethereum than in Bitcoin. And I'll have you know that I bought my first Ethereum over the weekend too. So I'm now a holder. or hodler.
You're a hodler, yes, a hodler. And ETH. I did the same. The sell-off in ETH was too attractive. I picked up some of that as well. But speaking of attractive, Matt, the folks are certainly are coming out of the woodwork these days with all sorts of intriguing scenarios for you and your magical back test machine. So if you're ready, I'll give you a couple of them. You ready, sir?
Sure.
All right. First off, this is a weird one. It actually came in not that long after our last show, so I actually had a chance to talk about it with some of the brokers on our network because it seemed like more of a broker type thing, but I'll put it to you as well. This comes from our regular listener, J3 Dingle. He writes, backtest scenario. And again, a weird one, but is it ever a good strategy to sell covered calls to avoid a margin call? I'm not sure how you could incorporate a margin call into your models, sir, but for some reason he wants you to backtest this.
Well, yeah, I mean, this is a different question, but what we found, obviously, in this, we backtest back to 2007, and the only thing that tests well in that time are out of the money, the 10 delta, 15 delta, 30 days, and we have on our blog we have a 3 million backtest strategy up there that you could go see all of the numbers and strategies and all that. Avoid earnings, implied volatility percentile is not that important. We test a bunch of things like that. So we didn't test margin calls, but I mean, I guess if you're having a margin call and you want to sell, that sounds like you're going to have to sell a pretty deep call. But so we didn't test that one, Mark.
Yeah, I don't really get what you're accomplishing here. I mean, you're going to have to effectively liquidate your position either way, right? You're selling a deep call to cover a margin call. You've effectively done the same thing. Maybe you get a little bit more. But for whatever reason, it was addressed to you, so I wanted to give you a chance to mull over. Speaking of mulling it over, another one. People have all sorts of interesting flavors. This one comes from Alexander from the Netherlands, or I should say Alexander. I like the European way of spelling it and pronouncing it. He says, hi, guys. Great show. My question is about put credit spreads. To manage the risk that the stock drops to my long strike just before expiration. So obviously, listeners, he's selling a put credit spread, selling a closer to the at the money or maybe even in the money put, and then buying a farther out of the money put, usually in a vertical against it. He says, to manage that risk, I tend to prefer diagonals. So he moves the long leg of the short put spread out a week. So he's doing this in the weeklies, obviously. He thinks this would generate some Vega profit in my worst case scenario. What are your thoughts on this strategy? Thanks, Alexander from Amsterdam in the Netherlands. This is an interesting one. It's another one, again, it kind of came in right after our last show, so I had a chance to debate it with some other folks on the network. But I want to get your thoughts on it as well, Matt, because it sounds like a pure back test scenario. So in his hypothesis, he's selling these, sounds like weekly put spreads. He doesn't give us in the underlying, so he doesn't get that specific. But he doesn't like it, obviously, when it gets to the long strike, you're kind of your when you're max pain type of strike there. So he thinks moving that long strike out just a week will give him enough of a Vega, aka a vol cushion, to offset that a little bit. This one didn't really resonate with me, but I'm curious for you, Matt, and your magical, mythical RHOADS machine. What do you have to say here for Alexander from the Netherlands?
Again, it's awesome to have Russell on, but it's awesome to have these the listeners are. This is a great question, and funny enough, I like this strategy a lot. And what I really like is selling a pretty meaty put and buying, like I said, a few days. You have your long one out of the money and a few days out, and that's what's been testing the best. So great question, and this is what I might do is put this one. What we're starting to do on our wheel product, which is our back tester scanner, paper trader. We have these pre-can strategies, so maybe I'll add this to a pre-can strategy so Alexander could check it out. But it's a good test, and I was surprised, and I hadn't heard much of it either, Mark. But we've come up with this ability. We have this consulting platform where we could test thousands of strategies, and we've just added these kind of diagonal credit spreads, and I started screwing around with it, and we found some good ones. So
really,
good question.
Wow, that surprises me, because my gut told me that the amount of quote unquote Vega pop you're getting for going out a week wouldn't be worth the extra premium involved, right? But it sounds like you're saying it is.
Yeah, there's something left when if it's going down that much, you get protection. It doesn't cost that much more often. And so it actually tested pretty well.
Well, that's surprising. Mr. Rhodes, what are your thoughts? Maybe this is going to be maybe Alexander from the Netherlands is onto something. What do you think about, instead of just selling your straight up old school put credit spreads, you roll the long leg out a week?
Oh, I think, well, the thing is, if you're rolling it out, you're probably doing so as volatility is going up anyway. So I think it benefits. You're getting some benefit from that. If you try to do the same thing on the call side, I don't think it would work at all. But also what he's talking about doing, I think has worked particularly well in what has been pretty much a bull market with just a couple of month exception over the past few years. So that may have something to do with the results of going in that direction. And I've done some work on where you're going to lose most often, where you're going to win on iron condors on some of the indexes. And yeah, I actually see things get run over more on the call side than on the put side. And in fact, avoid the call side sometimes when we're having a sell-off, because the put side seem to do so well. From different lenses, I see the same thing as well.
Yeah, it's true. It's different perspectives if you do it as a more of like a roll when the trade's going against you, versus it sounds like he's talking about setting it up that way from the outset, not doing it as more when the momentum's with you. And it sounds like, Matt's machine. Interesting. I would have thought that, the extra premium would have kind of overcame any Vega benefit you're getting, but it sounds like maybe not. Maybe I was too hasty to dismiss your strategy there, Alexander. All right, we're kind of coming up against it, but let's do one more, just because you folks are so patient and your questions are all over the place and we love them all. This last one comes from Jacob Stoker. Sounds like you have a lot of international listeners on this show today. He says, "Hello, I'm a big fan of your podcast and have been listening to many of the episodes. Many times I hear about laddering into positions. When it comes to laddering into a short straddle," interesting, laddering into a short straddle, "do you have to worry about inversion because of these different laddered entries? Well, I wouldn't intentionally be inverting positions. As the market moves and I buy additional positions, I would think that it could be natural to have puts priced higher than calls at the same expiration date. I think I am missing a fundamental piece of understanding and my thought process. I appreciate any insight. Thanks." Well, this is not quite what we were just talking about, but talking about before, the notion of using the roll and the inertia. He's talking about taking that to the next level and actually laddering into a short straddle. Again, that's why I love our listeners kind of coming at us from all different directions. Mr. Matt, do you have any thoughts here for Jacob and his concerns about laddering into short straddles, sir?
Yeah, I mean, a lot of people really look at those inversions, but if you have a strategy, and we tested rolls, and rolls, do work in certain cases. I just keep, I just continue to follow the same strategy. So what, in essence, he's talking about is you start with a short straddle, and it goes against you on the call side. So you're challenged on the call side. So it's going up through your call, and he's moving the put up to get more and more premium. And what's happening is he's actually passed the call. So it's not really technically a strangle or whatever at that point. And so he's saying, is this something that you shouldn't do? I think, I think it's a viable strategy. I mean, you continue to move up, continue to try to capture more and more premium as it goes up. Yes, you are going to have additional risk, but I think that you're either going to do it or you're not going to do it for reasons that you've tested. And so I find that you continue to do that. Your rule, you continue to move up that put at a certain delta range, and then you just I tend to stay with it. I look at these different strategies. I break them down into their components and test them on their own. So I in that regard, I would tend to just look at the puts on their own. Don't worry about where the call is.
All right, we can keep going on this for ages. I think we need, Matt. I think we need to have the magical mystery backtest hour, because people are just hitting us up left, right, and center with all of these just out of left field, which we love. It keeps us on our toes. You think about situations maybe we haven't talked about in a long time, or haven't talked about certainly on this show in a long time. So keep those coming from all over the world. We love you all. Unfortunately, that music means we're out of time for this episode of The Advisor's Option. But before we go, let's go back around the horn. Let's start with the guy who wrote the book about advisors and options, Mr. Rhoads. If folks are intrigued, they want to come at you about your crypto drawdown data, or talk about sell in May or go away, or any of this other fun stuff, where should they go? What should they do?
Well, anything that I write for EQ Derivatives is at eqderivatives.com under commentary, and anything I write is in front of the paywall. There's some things that are behind, but my stuff is in front of the paywall. Anything I write on NASDAQ actually shows up on their blog site as well. So the Sell in May article actually is up on the NASDAQ site. Anything I do, like right now, you and I are both tweeting as we talk. That's probably the place to find most of what I'm doing, what I'm thinking, etc. If I come across something interesting like that drawdown thing, I create a table and I just throw it out there and wait to get beat up.
Yeah, the crypto folks they're definitely the new gold bugs. It used to be you slam gold and they came at you. Now it's you slam anything crypto and the hodlers are out. Give them a follow on the old Twitters, listeners. You can see all this data is putting out and a whole bunch more. It's Russell, 2 S's, 2 L's, and then Rhoads, RHOADS, all one word, no spaces. Give them a follow. Mr. Matt, folks are clearly all fired up about the back testing and the earnings data and everything else. If they want to kick the tires for themselves and check it all out for themselves, where should they go? What should they do?
Another fun show, Russell. It's great to have you on. It feels like 5 minutes to me, but and we're having a lot of fun at ORATS too. We're getting a lot of international clients. I was on Singapore, Switzerland, and all over the place. So it's a lot of fun and to talk to everybody. So reach out, come over to orats.com. We talked a lot about the wheel. That's our online presence, and we have APIs and all sorts of stuff. So we're at orats.com. We're going to have a new site coming up pretty soon, Mark, so we're excited about that. And, Matt at orats.com.
There you go. Check out the new site for yourselves. Kick the tires on the back testers and the earnings vol and everything else. ORATS, ORATS.com is the place to go. You know where to go to check out our friends over there at OIC. It's just optionseducation.org. A lot of great content there, educational and otherwise. A lot, certainly for the audience of this program as well. Click on that advisors tab to learn more. And on behalf of Mr. Matt and Mr. Rhoads and our friends over there at OIC, and indeed myself, I want to thank all of you out there for downloading, streaming, subscribing, for listening live. Don't forget, if you haven't done so yet, check out the new Options Insider Plus and Options Insider Pro. All sorts of cool stuff going on there. This is just the beginning. We got a lot of cool things planned for that. Glad to see so many of you are already responding and diving in there. And we'll see you back here later this week. Tomorrow, double dose of education. You got Options Bootcamp, Options Playbook, Radio. Thursday, of course, This Week in Futures Options, episode 2, a.k.a. episode 1001 of the Option Block. Friday, Volatility Views. Then it all kicks off again. Another week and another month and another episode of The Advisor's Option.
Advisor's Option is brought to you by the Options Industry Council. The OIC was created to educate investors and their financial advisors about the benefits and risks of exchange-traded equity options. For more information on how the OIC can help you implement options in your practice, please visit optionseducation.org. The Advisor's Option is also brought to you by Option Research and Technology Services. ORATS is your source for options backtesting. It's where you turn your ideas into results. Founded on the floor of the SIBO over 2 decades ago, ORATS is a full-service option research firm focused on helping you develop options strategies in line with your investment objectives. With a state-of-the-art backtesting platform, scanning, and implementation tools, ORATS offers end-to-end option strategy development, making the whole options trading process easier. For information about backtesting, scanning options data, including dividends and earnings, visit ORATS.com or email Matt Amberson at matt@orats.com. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.